Guys, in this video we're going to talk about one of the top indicators about the MACD, which thousands of traders use to make millions of dollars every month. I will also show you how I made a profit using it too. But before we start, just a quick reminder. Trading signals are published daily on my channel. Also, in the description below you will find a link to registration page for pocket option, where you can receive your 50% bonus on your deposit by signing up. So don't forget to subscribe, the link is in the description below. Alright folks, let's start with exchange rate pair Euro-US dollar today. We're using two cool technical analysis indicator this time around MACD and stochastic oscillator. I kick things off with a trade assuming a $200 drop for a minute, and here's why. After a downward trend, the price goes sideways, or put simply, flattens. As you know, when this happens, the price shifts up and down till it hits a particular level and then steps out of this range. Right now, both indicators signal a likelihood of breaking through the established level. The stochastic is moving towards the lower boundary and the green MACD line crosses the red line from top to bottom. So, my read is this. Either the price lingers at the lower boundary of this range or it punches through. Either way, a decrease is consistent with my analysis. Though there wasn't a breakthrough that was enough for us to make our first $166 today. Now, let's get to know more about the MACD or moving average convergence divergence. It's one of the most commonly used technical analysis indicators worldwide. Almost every trader is familiar with this brilliant tool created by Gerald Apple. The most intuitive and easy to use indicators were developed by shrewd traders who made millions with their help. Gerald Apple's awesome story perfectly illustrates this. He invented the MACD back in 1979, but interestingly, Gerald wasn't always a savvy trader. He started out as a psychoanalyst and was also a renowned photographer. A really creative guy, Gerald. His deep understanding of humanity psychology was the fulcrum on which he built one of finance history's most successful indicators. Much to his surprise, his brainchild has a brighter future than Gerald had anticipated. Now folks, coming back to our trade, let's keep an eye on the chart of the Australian and American dollar currency pair. I'm kicking off with a trade predicting a drop since we're seeing a strong upward candle, but that's just a correcting movement. Both the chart displaying a clear downtrend and the two indicators hint at this. The stochastic is close to the lower edge and the green MACD line is beneath the red one. Spells out a quick fallback after such a striking correction, and that's why I launched the trade. Getting back to the conversation, when Gerald's work as a psychologist wasn't paying off as much, he decided to try his luck in trading and turned out to be pretty successful. As a millionaire, the author of over 15 technical analysis books, you could say Gerald's journey is somewhat typical of a successful trader. So far, we're doing pretty great too, with the last trade fetching us another $144. Now back to the tale of the MACD. Gerald created the MACD lines in 1979 and then in 1986 Thomas Asprey added a histogram to it, making the tool more precise. Thanks to Thomas, the MACD trend line was infused with a histogram. The main MACD signal can be used with any currency pair at any time frames. The MACD is simplicity personified, so it's a natural favorite in the trading community. The indicator has a green anything but complex MACD line, a red signal line, and the histogram to round things up. I'm going in for a trade, hoping for an increase. We're seeing a sideways movement pattern again, which I've tried to catch at its low point. Similar to our first trade, I am expecting the quote price to either go up to the top boundary of the flat movement or break upwards through it. Looking at the stochastic indicator, it appears that the buyers are gaining momentum, and here is an interesting thing. The MACD line has just crossed the red signal line from bottom to top, suggesting a strong indication of growth. As the price changes, so does the distance between the MACD and the signal lines. Our chart histogram provides a visual reference for this. It basically shows us how close or far apart the two MACD lines are. We've made another $164. Time to roll that back in and continue. The histogram can sit above or below the baseline. When it's above, it usually shows prices rising. If it's below, then it usually means prices are dropping. The basic gist is this: when the histogram is above the baseline and its value is increasing, it's just prices are rising. That's the time to make a trade for an increase. If it's below the baseline, then usually means prices are dropping, so that's when we would trade for a decrease. With the MACD, there are only three scenarios to study. These are the signal line crossing the baseline, and divergence. Get ready, friends! I'm opening a trade for a drop. We can see from the chart that it has hit a level post-growth. The stochastic indicator tells us that we're exiting an overbought zone. The MACD histogram is showing us some red columns, which suggest that the distance between the lines is beginning to lessen. This is what we call divergence, or more simply, deviation. This is the first scenario to study. Divergence is essentially a difference between the market price and the value indicated by the MACD. Simply put, it gives us a hint about the potential future direction of the price movement. Second scenario, then crossing of the signal line is probably the most popular signal generated by the MACD indicator. If the MACD line crosses the signal line, prepare for a sharp rise or fall in price. Besides that, crossing the baseline is another crucial signal to look out for. In this case, the MACD line is crossing the baseline and is clearly trending upwards or downwards. We've made another $166. Let's tally it up. As you can see, the MACD indicator is not only straightforward but also pretty effective. It's more of a strategy in an indicator. It helps not only to get the idea of a trend, but also to understand how strong the price movement will be. Thanks to it, we raked in $640 today. When the lines cross, the main idea is not to mess up with expiration. If you're working with 5 minutes time frame, then look for 25 minutes expiration. If you're working with an hourly time frame, then end of the day is your best bet. And if you're using a minute-by-minute chart, aim for short-term turbo options from 1 to 3 minutes. And guys, if you are eager to dive into the world of trading, do subscribe to my Telegram channel. There I publish not only profitable signals daily, but also some basics, tips, and tricks. So, in the description below, you'll find a link to registration page for pocket option as well. And there you can grab your 50% deposit bonus absolutely for free just by signing up. So, if you like this video, please do give it a like, subscribe, and leave a comment down below. I am wishing you good luck and see you very soon in the new videos. So, bye for now!